Good morning. Good morning. We're live, baby. We are live. Welcome to the pre-market rundown for February 24th, 2023. I made the thumbnail for this on a different computer and then came back to go live from this computer. And for some reason, YouTube would not show me where to go live from, like in order to do this broadcast. It showed me the broadcast, but not where to go live from. So I was confused, but we got it worked out. We're ready to go. Glad that I could, troubleshoot that in time to get on here, and I'm excited to dive into our last pre-market rundown for the week. We've got the last day of the challenge tonight. Absolutely amazing experience last night, and that's really all that my head is kind of focused on, wrapped around right now. We went over some very powerful information, and we'll go over even more tonight as we break down those blueprints. The blueprint for the bull market, the blueprint for the bear market, to really guide you in your overview of getting in sync with markets, understanding what step we're in, where we're at, and what trades you need to be making at that time. Again, that's completely where my head is at. But I'm excited to round out this week in markets as well. Let me go ahead and pull up the news that we got going on here. I hope everybody had a nice, restful, and restorative Thursday. And we are diving into the news we have on Friday to finish strong in markets this week. In terms of the top news here, as it always is, it's the state of inflation. So some major economic reports turned in surprisingly strong numbers last week, with January retail sales and CPI prints both beating economists' estimates. Now, personal consumption expenditures to be released at 8:30 a.m. Eastern Standard Time. PCE data, right, which has already dropped, may continue that trend of a consumer continuing to spend, even as economists predict a recession in 2023. Note that PCE is the Fed's preferred inflation gauge and follows January's robust labor market data and yesterday's downward revision of Q4 GDP amid lower consumer spending growth and more mixed signals. And that's really been the whole kind of trend of this week, right, is mixed signals. In terms of price action, the S&P really just showing a megaphone pattern where we're setting both higher highs and higher lows. So just, volatility as we get big money kind of making their moves in this very pivotal area that we are in. And where we close today will be very, very insightful in regard to, what the next move is for markets. If we close above a certain area, we get a hard bounce and we'll continue to go up and make tons of money to the upside. And if we don't close, above this certain area, then we can head lower, right? So in terms of data, we've got a lot of it this week, and a lot of it has been sending, mixed signals to markets. And we got, a number of different bearish pieces of information yesterday morning. And, as a result, we saw some selling during the market day, then a rebound. And it looks like we just saw, more selling overnight. So it's just up, down, up, down, up, down here over the course of this week. In terms of a snapshot, personal consumption expenditures are expected to rise about 1.3% month over month, which is down 0.2% in December, while personal income is expected to increase 1% month over month versus a 0.2% increase in the prior month. More importantly, the PCE price index is expected to climb 0.4 month over month, or 4.9% year over year, according to consensus estimates, with the core PCE price index forecast to advance 0.4% month over month, or 4.3% year over year. A higher than expected number wouldn't be good for equities because that implies that the central bank has more hiking to do. Market participants currently put a 73% probability of a 25 basis point rate hike to 4.75% to 5% in March, and a 70.3% probability of another 25 basis point hike in May. Meanwhile, the chances of a fourth rate hike in June to 5.25 to 5.5% are a little higher than 50%, according to CME's FedWatch tool. The S&P 500 is in a massive death zone, right? Seeking Alpha Marketplace author Lawrence Fuller, citing recent figures on the economic and inflation fronts. Look at that, a massive death zone. What a title. So why does the Fed like PCE? Well, compared to the headline-grabbing Consumer Price Index, which is based on a survey of consumers, personal consumption expenditures are based on a poll of businesses. CPI data also tends to be subject to fewer broad-based revisions, while PCE accounts for substitution effects. So PCE just accounts for more, and it gives, the Fed basically a better look and a more all-encompassing look at what's happening in terms of inflation and specifically how it's affecting businesses. So it shows how it affects consumers, how it affects businesses, and really gives insight into that, potential wage price spiral that you don't want to see, in terms of indicating that inflation is deeply ingrained in the economy, and in the services industry. Now, 1 year on, the anniversary that nobody wanted to celebrate, U.S. Treasury Secretary Janet Yellen has flagged Russia ending the war in Ukraine as the most important thing for the global economy amid devastating effects like the weaponization of food and energy. The warning at a meeting of G20 finance ministers and central bank governors came as China pushed for a ceasefire by publishing a 12-point proposal to end the fighting, with the conflict entering its second year. The list was immediately criticized by top American officials like National Security Advisor Jake Sullivan, who said it could have stopped at point one, which is to respect the sovereignty of all nations. It also called for the end of unilateral sanctions unauthorized by the UN Security Council, where Russia can make use of its permanent veto power, as Sino-Russian ties appear to be deepening. So again, we see that, this, it just seems like this prediction of war with China seems less and less far off. We just saw another headline again, which wasn't included here, but Biden is looking to, like, I think it was double or triple the presence of American troops in Taiwan. So it's just like, again, do we want war to happen? No, but when we are sending, quadrupling, doubling, tripling, quadrupling, I can't remember exactly what the headline was, but when we are increasing our presence like that, our military presence right off of, their border, right off of their coast, what are we expecting, right? And I want to find the exact headline because it was like really shocking to see. Let me see here. Yeah, Biden administration plans to quadruple U.S. troop presence in Taiwan amid China's tensions. So it's like, you don't do these types of things unless you are expecting some type of conflict. So we have deepening Sino-Russian ties, right? We've got, China and Russia that are in cahoots, right? They're thick as thieves right now, and despite kind of what might be appearing as, oh, this is just, two nations coming together, like, these two nations coming together with not the best of intentions when it might come to the global stage, right, and global stability. So we're 1 year on, and I think this is the one time that Janet Yellen and I, since she is mostly wrong, I don't tend to side with her a lot, but this is one of the times when Janet Yellen and I are on the same page. And that is the fact that, the global economy is not going to get over the hump until this war ends, because that is what is contributing to this ongoing food and energy crisis, right? The Fed can only do so much to decrease demand. At the end of the day, decreasing demand isn't going to stop people from needing gas or needing heat for their homes, right? Or needing food. You can only do so much, right? When where the food is coming from is more expensive, regardless of what you do. So, that's something that's going to need to happen in order to tame inflation globally. And if it doesn't happen, then we end up having this long, drawn out, protracted battle. Because if the Fed stops hiking and then inflation just hikes right back up, what is the Fed going to have to do? Keep interest rates higher for longer. And what is that going to do? Depress the economy for longer, right? It's going to make these companies continue to downsize. And if these companies stay downsized for a long period of time, they're not going to go back to upsizing, right? So what does this, point to? Stuff that's out of our control. So what do we have to focus on? What is in our control? You can't control what Russia does. Nobody can. But at the end of the day, regardless of what they do, you can make sure that you and yours are taken care of based off of the skills that you have to put your money to work for you in markets, right? Just like the stuff that we're going over in the Market Blueprint Challenge, right? Just like all that amazing information, that profitable information showing you ways to bring home, 90% probability of you bringing home profit, right? When you know those, it doesn't matter what Russia ends up doing, because with what you have now, you're a stone cold killer, right? And that's what you want to be. You want to be very, very decisive. You want to be very, very effective with, whatever you have. And that way, no matter what little you're left with, that little can turn into a lot. Now, in more morbid news, gets the slow news morning. Famed billionaire Thomas H. Lee has died at 78, with the New York Post reporting that the leveraged buyout pioneer was found dead of a self-inflicted gunshot wound in his Manhattan office. That awfully sounds like something that would just happen in, like, The Blacklist. I don't know if you guys watch that TV show, right? But overall, it just, that leveraged buyout pioneer, like, this guy essentially went along and kind of created hostile takeovers of companies, right? Like, this guy kind of, he went out and he was, taking over companies, doing this, doing that. People like that make a lot of enemies. So overall, I'm kind of suspicious whenever I read that, but Obviously, prayers out to his family. That's sad. Someone lost their life, and that's a horrible situation. But overall, it's just it kind of just reads like something that you would see on at the end of an episode of some type of like conspiracy show. Um, Lee, whom Forbes magazine listed as having a $2 billion net worth, started the firm that became Thomas Lee Partners in 1974, but parted ways with the company in 2005. Under his supervision, Thomas Lee Partners spearheaded several famous and highly profitable leveraged buyouts, including the 1985 $28 million purchase of Sterling Jewelers, with which sold, I think that was a typo, it said with sold, which sold just 2 years later for $210 million and is now part of Signet Jewelers, ticker SIG. He also led 1992's acquisition of beverage giant Snapple for a reported $135 million, which was sold to Quaker Oats, now owned by Pepsi, for $1.7 billion in 1994. After leaving Thomas Lee Partners, Lee founded middle market private equity firm Lee Equity Partners, where he served as chairman at the time of his death. So, again, prayers and condolences to the family. That's a very horrible situation. And it looks like, he got a lot done during his life. So, he created a lot of things, and then acquired a lot of things, right? And you just, it's tough. You never know what's going on in the world of business, but again, you just want to live each day to the fullest, right? Live each day with gratitude, live each day with love. So if it is your last day, you can go out and you can say, you know what? I'm proud of that, right? And I'm darn sure proud of the past few days we've had as part of the challenge. Just the vibes, like the energy, the learning, all that is just off the charts. And I'm super grateful to just be a part of a community like the one that we fostered here. And I'll continue to be grateful for it. My PMR family, my stock options made easy family, right? Just everyone under the Holland letterhead, like you guys are amazing. And I'd not rather spend that time with anybody else. In terms of retirement analysis, how bad was 2022 for retirement accounts? Pretty awful. While 401ks rose in the fourth quarter, average balances finished the year down 23% to $103,900. That's according to Fidelity Investments, the nation's largest provider of retirement services, with more than 43 million accounts. Now, average IRA balances plunged by a similar amount, falling 20% year over year to 104,000, while 403b plans for public sector and nonprofit organizations declined 19% to 92,683. Even more disconcerting is that nearly half of all retirees now expect to outlive their current savings, which may cause some regrets among those that chose to retire early because of the pandemic. It's very important to recognize that this world is constantly changing, and just because you have a plan set up for yourself does not mean that plan is going to work, right? You've got to stay malleable, you've got to stay nimble, you've got to stay quick on your feet, right, and ready to respond, because the plan that you have set up, they say God laughs in the face of your plans. We got the pandemic, we have, economic downturn, we have war in Ukraine, we have all these different things that are culminating, and it's affecting people's plans, the ability for you to retire, right? The ability for you to settle down, the ability for you to be able to sustain yourself through retirement, right? All of that, is affected by these things that happen. And if you don't know how to make money when the market is going down, you'll struggle, right? And when your money drops by a certain amount, it has to make up 100% of that ground in order to get that money back, right? If you lose 50% of your account, then your account has to make 100% recovery in order to make up that 50%, right? So if your balance is finished down 23%, you've got to make a 46% push in order to get that back, right? Which a lot of people don't understand with markets and with portfolios. So in order to make sure that you are cushioning that, you've got to know how to make money off of the downside, right? The trend is your friend. Work with the trend in whichever direction that is to make sure that you end up okay. Now, in terms of today's markets, we got data that came out, so that might have us pushing. Oh, it looks like we actually have this open in the background, so I can go ahead and check that out. Looks like the data, the PCE data, we don't even have to check that out. It just pushed us lower, so we continue, right, to set these lows, these lower lows and these higher highs. We continue with this megaphone pattern. Again, it's where we end the day, right? Where we end the day is most important. But yeah, we just got this up, down, up, down, up, down in a widening fashion. And it looks like, the market did not like this PCE data. We already got the preliminary PCE data yesterday morning, right? It was either yesterday or 2 days ago. And it was higher than expected, right? So it looks like the exact same thing was the case here for the data that we just got concerning inflation, right? So it looks like in this case, we had the real data match up with the preliminary data. This wasn't a surprise coming into today, given the preliminary data. You just watch where we finish by the end of the day, right? And that's going to be important moving forward. As we plot our course here for the weekly. Now, in terms of today's economic calendar, we have consumer sentiment at 10 a.m. That's something that can move markets, right? So at 10 a.m., if you see some volatility, that's likely why. We've got a member of the Fed, Mester, and Collins. Mester speaks at 10:15, Collins at 1:30. If you see any volatility around then, it could be because they're speaking, but overall, unless you're Jerome Powell or James Bullard, the market isn't really moving too much. Even with Bullard now, it's not moving a whole lot when he speaks, so it's mainly just Powell. But what else is happening? We'll finish up with our rapid fire bullet point rundown here. Office consolidation, Google employees to start sharing desks. Wow. DOJ, Department of Justice, reportedly set to sue Adobe over $20 billion Figma app acquisition. So again, we just see these regulatory agencies just cracking down, right? Whether it's the SEC, the DOJ, the FTC, everybody cracking down on these big acquisitions. Under the Biden administration, these large, business acquisitions, NVIDIA with ARM, Microsoft with Activision, right? All of these big acquisitions are coming under heavy scrutiny. And the Department of Justice isn't liking, what it's seeing here with Adobe acquiring Figma. Chip ETF surge along with NVIDIA's earnings fueled rally. Boeing, ticker BA, pauses delivery of 787 Dreamliners over fuselage issue. And then Netflix cuts global prices as it wrestles with growth versus revenues. Year of building, Warner Bros. Discovery, ticker WBD, hit by slower ad revenue. Pioneer Natural Resources, ticker PXD, CEO sees $100 oil by the summer. Vanguard announces a 2-for-1 split on 6 equity ETFs. And then should Caterpillar buy AGCO for farm machinery growth? Then gut reaction, Beyond Meat soars. Domino's Pizza tumbles after earnings. So we got Beyond Meat, with the rare green, right? They've been struggling for a while after they found, kind of that pandemic era boom. And then Domino's tumbling after earnings. So no good news on the pizza front. But that'll pretty much, wrap us up here for the pre-market rundown for February 24th, this Friday, right? We got in a lot of good information, but again, the focus is on tonight where we really drive things home. And I'm super, super excited to do that. So, if you got a valuable piece of information from this session, all that I ask that you show love, right? Show love to the account. Like the videos that you see on YouTube from me, comment on them, right? Comments are big, saves are big. Just support the account, and I'll continue to support you as we work further toward our joint goals, right? Of maintaining financial vitality and keeping our own destiny in our own hands. So I appreciate it in advance. Thank you guys for tuning in. You definitely got 1% better. Good luck out there in markets today as we look to navigate this continued megaphone pattern. And I'll see you guys on Monday, likely for our next pre-market rundown. Have a good one.